I'm not making any financial advice, and I encourage people to learn more about it themselves. But once you get into the Bitcoin ecosystem, there are a set of tools that traditionally have not been available.
Hunter Albright, a global investor, educator, and the co-author of The Bitcoin Advantage, argues that Bitcoin is far more than a speculative asset or a passing digital fad. It's the foundation for a new era of asset-based income, where individuals can own, borrow against, and protect appreciating digital wealth without the traditional gatekeepers of finance. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
How do you see Bitcoin? You see it more like a currency, a store of value? What's your view?
So I think today it's more of a store of value. I think that's the problem that is most pressing globally. People are using it to solve. Now, as I've traveled around the world, and I'm with Sean Owen, who's the founder and CEO of Salt Lending, we're writing a book called The Bitcoin Advantage. And so I've been traveling around talking to people globally about what are they using Bitcoin for? How do they think about what do they like about it? And there still are areas where remittance is the most challenging problem that they have personally. And so they use it as a means of exchange. But for a lot of countries and a lot of people, the store of value is becoming more and more important, especially because now globally, I think the average age of first-time home buyers now is over the age of 35, right? Used to be in the States, it was around 25, and that's dramatically changed over the last decade. And so what you're seeing now is people don't have a tool to start to learn financial literacy, to start to develop value and wealth in a set of assets. And so I think Bitcoin has a real role to play for generations now that don't think about home equity or real estate as the gold standard for building wealth anymore.
Do you follow the cycles? Are you into a kind of a short, for me 4 years by the way is a short time frame, but are you following the movements in the short time frame?
No, I definitely tend to look at all of this from a much longer term perspective about building wealth and what you want to do with your assets. I find it interesting, intriguing, and a bit amusing in terms of all the cycles that are spent on short-term price speculation and sort of monitoring all the trends. And I watch some of it, I enjoy a lot of it, but I do think that really to manage sort of Bitcoin and sort of your wealth, you've got to be taking a longer point of view. It's one of the things that I end up spending a lot of time talking to people about, because I think Bitcoin is now changing this. I think there will be a global shift, and I'm hoping to help be a part of educating people about it, about how you go from having labor-based income, right? Selling your time, working for hours, and earning a sort of monthly, weekly income, to having asset-based income. And I think it's really important because this is what the wealthy have been doing for centuries, right? They accumulate assets, the assets are appreciating, and for a lot of them, they'll borrow against those assets to be super tax efficient and be able to put their money to work in multiple ways at the same time. And so I'm not making any financial advice, and I encourage people to learn more about it themselves. But once you get into the Bitcoin ecosystem, there are a set of tools that traditionally have not been available to individuals that didn't have substantial amounts of wealth. And that has all now changed. And so I think the ubiquity of being able to now own assets that appreciate, to be able to leverage their value in proactive ways for building your own wealth is fantastic.
How does someone borrow against their Bitcoin? How does it work?
The way a loan works is to take out a loan, you would transfer your collateral to a lender, such as Salt Lending. And Salt Lending then custodies that collateral while you have a loan. And we make loans up to 70% loan to value. So if you have $100,000 worth of Bitcoin, you could borrow up to 70,000 sort of US dollars in sort of fiat currency or stable coin. So that really is providing people liquidity against their assets. Now, from a use case perspective, we see people borrowing for three primary different use cases. The first one is, I have an expense. It might be because I want to take a trip, or it's because it's an emergency, and their assets, their stack of Bitcoin allows them to cover that expense in a very tax efficient and timely way by being able to take out a loan against it. The second set of use cases that people leverage loans for is what I would refer to as income replacement. And so these are people that are borrowing against their Bitcoin, maybe to supplement their current income so they don't have to work full time. They might want to travel some months out of the year, and they're doing it to create financial freedom and financial flexibility. The other group of people that are doing that are people that are full on retiring on Bitcoin. And we'll see that group have LTVs of 20, 30%. So really low LTVs because they're only taking out a little bit every year, right, to live on. They're taking out what they need, and they've learned how to be very sort of prudent within their own sort of financial profile and risk management tolerance or risk tolerance. And they just are sort of playing the long game in terms of how they're tapping into the value of their Bitcoin and working on taking out a lot of the volatility. And then the third use case that we see people using it for is really for growth. So that people may take a small portion of their Bitcoin, borrow more against it to buy more Bitcoin. They may borrow against it to buy other income generating assets such as commercial real estate or dividend producing stocks and bonds, all of which help them build up this stack of assets where they ultimately can live off the income of their assets rather than ultimately having to think about necessarily having to have an income-based job.
Bitcoin is now democratizing that access, allowing anyone, not just institutions, to build an asset portfolio, borrow against it, and live off its appreciation. This represents a new age of financial independence, one that transcends national borders and traditional economic structures.
So we're not generating any yield. We are just providing loans. So we do have a product called Lend where we do provide a yield on Bitcoin, Ethereum, and stablecoin. But the majority of the business that we do on a loan side is we're lending you money, and for that liquidity, we get paid an interest rate. That's the exchange of value. And then when you pay off your loan, we return your Bitcoin. The ups and downs in terms of the market cycles. And one of the things that has really helped differentiate Salt has been the capabilities that we have introduced to help protect people on the downside risk. So the first set of technologies that we built were really sophisticated margin calls to allow you to get the notifications you want and you need to understand what your loan LTV is at and when you should be looking at putting more collateral into your account to sort of help manage it and right, not run into any sort of negative event on the downside. The second thing that Salt then introduced was what we refer to as stabilization. And so stabilization is a real-time trading integration capability that we built on the platform. And that when your loan gets to 90.91% LTV, your collateral can get converted into stablecoin. So this is something that customers can opt into. And if there was a significant price drop or you were out of touch while you were traveling, you would not, it's there so that you don't get liquidated. You know, we're big believers that it's your Bitcoin and we want to do everything we can to make sure it stays your Bitcoin. And so on the price drop, we have, if you opt into it, you can get stabilized. Your collateral would be converted to stablecoin, and then you could buy back in when you want. We've had a number of customers that have managed that very well and been able to buy in lower than what they had originally bought the Bitcoin at because they sort of bought on the dip, and that was part of their strategy. They kept stablecoin sort of fiat to the side and were ready to do it when they needed to do it and come out ahead in the long term. And then the third thing that we actually recently introduced is what we refer to as Salt Shield. And this is a optional sort of subscription fee-based program that people can opt into for till the maturity date of their loan. And it takes away the downside completely. Basically buying protection and not having to make any margin calls, not having to worry about liquidation for your collateral. And so we are continually working on figuring out how we can provide better protection on the downside, because as we talked about, that's what most Bitcoiners are really scared of. They don't want to lose their Bitcoin. That's where they're putting their wealth. That's where they're putting sort of their investment for the future. And we think it's really important to help, one, educate about how to manage that. And LTV is a big lever that can be managed based on your own risk profile, but also we're working to build other capabilities to help protect those assets. At a 30% LTV, you can basically absorb a 67% price drop before you would go into stabilization. So you think about LTV as a way to manage your risk. The more risky you want to be, I would say, it's not financial advice, so the way I think about it for myself is I will take smaller portions of my assets to be more risky with in terms of reinvesting or trying to grow faster, putting that fiat to work in other investments. And then there's other parts of my assets that I want to be super conservative with, that I just want to basically be hodling them, thinking about the long term. And maybe I will leverage them a little bit in terms of taking some cash out, but that's not the purpose of those assets.
Bitcoin is not just about technology or speculation. It's about financial evolution. It's about equipping a new generation with the tools and knowledge to build sustainable wealth in a world where the old playbook no longer works. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.